Right, good morning to those of you joining online. Like I was just saying to the guys in my office, as much as I don't like this judgment, unfortunately, we must discuss it because it is a judgment of the High Court, of the full bench of the Western Cape High Court, and the judgment effectively overturns a judgment by the Western Cape Tax Court of December of 2024, which I found quite refreshing, that tax court judgment. Right. My name is Nico Tron. For those of you who don't know me, I studied some tax. I'm the managing director of Unicus Tax. This training is intended for my staff, and for those of you joining online, really it's only for your interest's sake. Right. The central thesis to, and I will circle back to this conclusion because really that's my overall conclusion, is whilst I accept the High Court, and in fact even in the tax court judgment, of which I also have a 3-part training series on the YouTube channel, I kind of understand the central reasoning on the merits of the case, right? My principal concern with this High Court judgment, which we'll discuss now, is not necessarily the final result, but it's the route the court uses to reach that result. And the judgment, in my mind, of the High Court raises two, if I could put them into two broad categories. The two broad categories is, one, my criticism is there's a selective or restrictive application of Labat on what constitutes expenditure, in my view, right, on the pleaded case, and a procedural approach that allows a court to move beyond SARS's pleaded case and use the taxpayers' onus to fill the gaps, right? My issue is more procedural, right? It's the same procedural issue I have with the prescription analysis, because there I also have an issue with the court's approach to prescription, and with respect, I think the High Court is plainly wrong. Right. So let's, for those of you who don't know the facts, go into the facts quickly. The taxpayer here carried on citrus farming and faced crop risks, including some diseases that the crops could get. I'm not going to try and pronounce those names, right? It previously would have absorbed, if it made losses because of these diseases, it would have absorbed these losses from their own reserves. Now, shortly before the 2017 year end, it entered into a Santam structured self-insurance arrangement. How this thing worked is you pay 10 million, right, as an insurance premium, and you get approximately 12 million rand worth of cover, and Santam charged a fee of 400,000 rand, right? So you pay 10 million rand premium, you get 12 million rand cover, you pay 400,000 rand fee to Santam, right? So in other words, we pay 10 million, Santam takes 400,000. 9.6 is effectively what remains, right? That 9.6, and yeah, I'm on the same page because I'm going to get frowns in a minute, right? This 9.6 million goes into an experience account, is what they call it, where it earns interest for the benefit of the taxpayer. And claims, if you make a claim under this insurance contract, then it's paid out of the money in your experience account, right? Up to the 12 million rand cap, of course, but it comes first out of your experience account. And if there's nothing, you can draw the money, you can cancel, terminate, and all the interest accumulated up to that point in time will just be paid out to you, right? So in fact, that's what happened. So since no claim was made in 2021, the taxpayer ultimately recovered approximately 11.3 million. So it paid 10 into an account, of which 400,000 rand went to fees. The balance of 9.6 earned interest, no claim was ever made, and then they cancelled and the 11.3 million claim paid out. And they said this is insurance, right? This is an insurance premium. Right, the taxpayer, of course, in their 2017 return said, I'm claiming the 10 million rand as an insurance expense. They failed to declare the notional interest that the taxpayer earned, right, in 2017 of 1.1 million, right? SARS flagged the large increase in the insurance expenditure and requested an explanation, schedules, and supporting documents. The response described the product as self-insurance, but the taxpayer did not provide a complete copy of the insurance policy and the experience account statements that shows that this thing earned interest, right? After the 3-year period, SARS went back and audited 2017 to 2019 and raised the additional assessment. Right. The tax court's conclusions, right, which you can go and have a look on the YouTube channel. There's a 3-part video series on the tax court's judgment. But the court says that prescription applied and protected the taxpayer from SARS's additional assessment on 2017 because SARS failed to prove the qualifying conduct and the necessary link, right? Section 1992 had to operate on a per line item basis, so one tainted item, so in other words, the non-disclosure, for example, of the income, was not an open sesame to reverse expenditure. And the court used the fact that each line item constitutes an assessment, right? Claiming the payment as a deductible insurance expense was a legal position because they had taken advice. Everybody told them that this is deductible insurance premiums, right? So the court in the tax court said, well, that's the wrong, or that might be the wrong legal position, but that's not a misrepresentation of the facts, because the court says there must be, for misrepresentation to apply, there must be a misrepresentation of fact, not of law. And how often do we see in SARS's additional assessments, I can make an audit finding, therefore I can lift the veil of prescription because there's misrepresentation. That is a finding of law, not one of fact, right? And so therefore, that's why I hail the tax court judgment as one of the most important judgments handed down in the last couple of years, because it addresses that issue that I can make an audit finding, therefore I can lift the veil of prescription. And SARS, and the court used Labat here to say, okay, what SARS's case actually is on the merits. So first of all, the taxpayer should succeed on prescription was the tax court's finding, right? Because SARS had said, I can make an audit finding, therefore I can lift the veil of prescription. And then the court went on to say, well, even if he's wrong on that score, then SARS's pleaded case was that the expenditure was not actually incurred, right? And the court said, well, look, there's a actually incurred expenditure. First of all, if we look at Labat, says there must be a diminution or at least a temporary movement of assets, right? And actually incurred means an unconditional legal obligation. And so SARS, on your pleaded case, there is an insurance policy. The taxpayer, without a doubt, has a legal obligation to pay this amount to Santam, presumably, right? And therefore, on the pleaded case, you fail, SARS. The taxpayer can prove it was actually incurred, right? And the court, in fact, asked SARS's counsel in the tax court, as far as we can tell, SARS, are you pleading or are you trying to place the transaction as a simulation or a sham? And they said no. They said our case is actually incurred, right? In fact, anyway, let me stick to the slides, right? Right. The High Court order, of course, SARS then took this judgment on appeal. SARS's appeal was upheld. So the High Court set aside the tax court's judgment. The additional assessment was confirmed. The understatement penalty is confirmed. And the High Court held that 9.6 was not deductible and that prescription does not prevent reassessment. Right. Now, the way the court gets to this answer is, again, like I said at the beginning, for me is not the issue. From the perspective of the facts of the case and on the merits, I tend to agree with this outcome, because the court says, look here. In fact, in my previous videos, I alluded to it on the tax court judgment already, because I said my criticism is more procedural, really, than it is substantive. Because this is nothing other than a deposit in a bank account, right? It's not insurance. The court does a whole analysis of what is the essentialia of an insurance contract, the passing of risk and the sharing of risk amongst people who contribute premiums, and this is not that. This is a ring-fenced account for your benefit only, and the thing earns interest. What sort of expense earns interest, you know, for the benefit of the taxpayer? And so the court kind of cuts through it and says this is a deposit disguised as an insurance contract. And with that much, I think I can safely say I agree, right? Because it's difficult to get around that. I said that at the time, that I think that is a bit of an issue, right? On deductibility, the court said, well, once we accept that this is not an insurance contract and that this is but a deposit, then it cannot be expenditure, right? Because a deposit is not an expenditure. The court refers to Labat, but he says Labat doesn't envisage you putting money in a bank account. It's like a loan, he says, and he refers back to the Gen case, which I've quoted a million times in deposit cases to say, well, a loan is not expense. You don't expend it when you borrow some money because you expect it back, right? And the court said in Labat, the court didn't consider a movement of assets in that sense, because there's a movement of assets. I'm swapping cash for a loan claim. And the court says, no, Labat didn't consider that to be an expense. There must be almost as if the court wants to suggest there must be a permanent decrease in assets. And the court uses the same premise to say this was a deposit dressed up as an insurance premium. That was the product. It was a deposit dressed up as an insurance premium, and therefore there was misrepresentation. Also, during the verification process that SARS conducted initially before the assessment had become prescribed, the representative for the taxpayer didn't respond and give SARS all the policy documents. Although they described it as self-insurance, the court says, well, when I look at that behavior of not disclosing, you say to SARS it's self-insurance, but you withhold some of the money and you withhold the experience accounts detail that will show that this thing earns interest, that's misrepresentation. And therefore the court says I can lift the veil of prescription, or the prescription doesn't protect the taxpayer in this case. So like I said before, I agree with the High Court, I think, in terms of the merits, that this is not insurance. It doesn't seem to me like insurance. I said it at the time the tax court judgment was handed down. So my disagreement is principally doctrinal and procedural. It's not that I think the insurance premium is necessarily deductible. For me, it is procedural. And to me, this is crucial because, one, the first criticism I have is the court's reading of Labat. Now, Labat actually says that expenditure, not that SARS's case is expenditure, SARS's case was expenditure actually incurred, but nevertheless, at least as I understand it, but nevertheless, Labat says a diminution of assets, even if only temporary, or at least the movement of assets constitutes an expense, right? And here what happened is we moved assets and what, cash for insurance claim of 12 million, by the way, not only 9.6 that I had left, right? So is there movement of assets? Absolutely. Is it temporary? Perhaps, yes, but Labat said that's fine. It's only if you strip away the actual nature of the contract and say, well, it is disguised as an insurance as an insurance contract, that you can come to the conclusion that it's a deposit. In which case, I agree, deposits don't constitute expenditure, right? But the rule of Labat is there must be a movement of assets, right? If we say that because one of the issues here the court has is you've got a corresponding claim in the same amount, right, in this case. So there's no movement of assets, but if you think about that, any asset a taxpayer acquires will then not be an expense on day one, because I buy an asset for R1 million or a machine, and what I have is I parted cash in exchange for an asset. My balance sheet is not moved at all on a net asset basis. So are we then saying that no? Then if there's no permanent decrease in your asset in your expenses on your balance sheet, then there's no expense. Then well, I'd reckon there's a bunch of expenditure that people are claiming that's not deductible. But I accept the court comes to this conclusion on the basis that it strips away and recharacterizes the nature of the contract as a deposit agreement. That I mean, there's sufficient, but that was not SARS's pleaded case. That is my biggest issue. In fact, when asked in tax court, is that your pleaded case? They said no, right. The deposit conclusion depends on the substance over form, which again is not SARS's pleaded case. This is not what SARS said. SARS said this is not actually incurred. And when pressed, is it sham? Is it disguised? They said no. And the High Court deals with that. It says, but SARS cannot be held to the concessions made by its counsel on points of law. That's the way the High Court gets around SARS's concession, which is a debate for another day, right? But the issue I have is how must the taxpayer know what case it's supposed to meet if SARS hasn't pleaded it, right? We'll get to that now, right? We'll get to that a little bit more. SARS's case was 11A, 23L, and 23E. They SARS's counsel expressly disavowed sham assimilation. Now, the trouble is the taxpayer prepares, when we go to litigation, which is something that unfortunately with SARS we have to do often, we prepare to meet the case in their Rule 31 statement. Not whatever possible other things they might possibly come up with or that the court might possibly consider relevant to building SARS's case. How it would make litigation against SARS almost impossible if you prepare for case A but you fail on case B, which nobody made out. That's it. With respect, I don't think that can be right. Right. The tax court, and here's when I was analysing the tax court judgment, I looked at my videos of last year on the tax court judgment. When you look at the way the tax court approaches acting Justice Michael Yarnish, it seems, approach the judgment is to say, look, SARS, this thing has got deposit-like features. That's why it's almost as if, when I read the judgment, it's almost as if the tax court was trying to say to SARS, you pleaded your case wrong. And he, in fact, tried to help SARS right, to say, are you sure, or not are you sure, are you pleading this is sham or simulated? right? Because the court, when you read the judgment of the tax court, he starts the story off by saying, normally the guys would make their losses whole from their own reserves. And all they did here is when provisional tax came up, they wanted a deduction, and so they took out this insurance product, which is not really an insurance product, it's just a deposit, but you dressed it up as an insurance product. But SARS, that's not what you said. You said it's not actually incurred. So I must determine the case on the pleaded issues before me. In fact, Rule 34 says exactly that. It says the issues in front of the tax court are those contained in the pleadings. Sham, simulation, disguised transaction was not there, right? So in my view, I think that the issue is that the High Court, in my view, in this particular case, seems to have fixed the gaps in SARS's case for it, right? Which is what I think when I read the tax court judgment, the acting justice was trying to also say to SARS is, here's your case actually, are you sure you don't want to run this case? And they just said no. And so the High Court comes to their rescue and says, don't worry, I'll plead your case for you. At least that's my reading of the judgment, right? And here's my reading of why the court gets to this, right? Or one of the reasons the court gets to this is it says, when you look at SARS's Rule 31 statement, SARS said that the expense is not deductible because of Section 11A. That shouldn't be capital A, that should be small a, right? So the expense is not deductible as 11A. That means all of the requirements of Section 11A is placed in dispute, and the taxpayer must prove trade actually incurred in the production of income, not of a capital nature, right? Despite the fact that the gist of SARS's case, as pleaded, is actually incurred. If SARS provides no facts for reliance on why it's not in the production of income, how must I respond in a Rule 32 to say, but it is in the production of income because you've got the facts wrong, or that, right? The court uses 11A as a pleaded case to say, if SARS says 11A, you must, because you carry the burden of proof, SARS pleaded the whole of 11A, and you must come up with some answer somewhere, right, for all the things that SARS could possibly say but have not yet said. And that's what you must defend in Rule 32. That's what I'm saying. It would make litigation almost impossible. And the court then says, well, SARS did plead. That's kind of my reading of why the High Court says SARS did plead. That and Section 102 that says the taxpayer carries the burden of proof, so the taxpayer must prove all the requirements are satisfied. All right? Honestly, I don't think that can be right. Right? And one of the main points of criticism I have against this is the Pretoria East Motors case, where the court said, look, taxpayers carry the burden of proof, but that does not mean SARS can adopt a supine attitude and say, I'm going to raise an assessment, you come and prove in due course that I'm wrong. No, the court said SARS must have proper grounds for raising their assessment in order to engage the taxpayer in a procedurally fair manner as they're required to in terms of the Constitution. Right? So now, the principle here is that the taxpayer must know the case it's being called upon to meet. It must know what it's being called upon to prove. I don't know what your issue is, SARS, with saying it's not in the production of income, if you didn't plead the facts and the law of saying that. What is it that you want me to prove? Right? It cannot be that once SARS has pleaded a section, you must satisfy all the requirements. You must show that you satisfy all the requirements. It would make it impossible, right? So because what evidence must I then lead? Right? SARS, you don't plead it, so now I go to the tax court to meet the pleaded case, and it turns out, no, you actually, you know what, substance over form. If I knew you were going to raise that, I would have perhaps led evidence and get testimony from people to explain why it's not, or why this, or why that. Anyway, I hope this case goes on appeal, not because I think that the judgment is necessarily wrong in its conclusion, but it raises procedural issues that would make, and when it gets to prescription, it gets even worse. Right. The capital character, because one of the things the court said is, okay, look, I don't think it's actually incurred because I think it is a deposit, right? But then the court goes on to say, well, even if I'm wrong, I can go to capital because SARS pleaded the whole of 11A, and 11A says you can't deduct expenses of a capital nature, so the court then looks at 11A and goes to the Boerdery case, I forget, Sacred Corporation or something, case that said, no, it's a capital expense, right? But that breaches Rule 31, because Rule 31 says SARS cannot plead a ground for assessment that constitutes an innovation of either the factual or the legal basis. If your pleaded case is it's not in the production of income or it's not actually incurred, and you later change or add, it's of a capital nature, right? That's an innovation, granted not of the facts, if you rely on the same facts, but of the legal basis nevertheless. right? So the court says, yeah, I can get to the conclusion on capital on the same facts. I know. So can anyone. But that's not the point. The point is it an ovation of the legal basis, because that is also an impermissible new ground. And so I think that the court's analysis of allowing the capital nature, I think the court actually goes into the reduction of income point also, but anyway. The practical consequences of this approach, if it stands, right, if it stands, of course it's always fact specific, and we will always say that the facts of our cases are different and whatever, right, but it is nevertheless a full bench judgment of the Western Cape High Court. If this approach stands, a taxpayer can never safely assume or answer only SARS's pleaded case. It must go and consider, what if SARS raises 23F? What if SARS raises GAR? What if SARS raises this? How do we defend that? Yeah, you can make a list, and I can assure you there are many cases I've sat in where I said, well, SARS's pleaded case is X. If I were them, I would have raised X, Y, and Z. But they've not raised Y and Z. They've only raised X. So I'm not going to tell them to raise Y and Z. I'm going to defend the case in front of me. And now it seems I must consider all the other things. Right. It seems to me that if this position were to stand, or if my interpretation, let me put it that way, of this position were to stand, I think it would render the pleadings largely irrelevant. Rule 31 and 34 in particular would become largely academic. You must just deliver a Rule 31 statement because you have to, and just say the wide sweeping things like 11A, and then you're covered. Don't worry, we'll come to your rescue. If you make a boo-boo, we'll rescue you later. It's fine, right? Don't worry. Right. A court may interpret it, may not build a new case. Now, I'm careful with my words, and I say this with respect, is it seems to me the court in the High Court judgment gave SARS the missing pieces it needed for its case to succeed, right? Which is what the tax court was reluctant to do. When you read the judgment, you can almost, like I said, on my interpretation of the tax court judgment, you can almost see the judge saying, listen, are you not trying to say, perhaps, rather, that this is just a deposit? Don't you want to say that? Right? Is that not what you're trying to say? And so I said, no, that's not what you're trying to say. The court said, well, on my interpretation, the court said, well, okay, then I'll decide the case on what you've pleaded. Right? But here, I think the High Court might have given SARS the missing pieces. My criticism on prescription, the first thing, is the court goes into, so let's assume now the deductibility issue and the court is right on the deductibility and that the other issues stand. Let's not go into misrepresentation as the issue here, because prescription is something we deal with often in practice, right? So the court finds that in dressing up a deposit as an insurance claim, and by not responding in full to a verification request, the initial verification request, means there's misrepresentation. But my issue is I can have, and remember, this taxpayer went to see his or her, their accountant or advisor, and in fact, I think someone from Santam, and they assured him this is tax deductible, right? This is an insurance product. We sell it as an insurance product. It's tax deductible. If I bona fide believe that that's tax deductible, have I misrepresented? Right, the court does say bona fide misrepresentation is, the tax court does say an honest misrepresentation doesn't. I've got some criticism on that, but that's a discussion for another day. But the mere fact that you believe that the legal position is it's deductible doesn't necessarily mean you misrepresented, and that's what the tax court said. And the High Court says, no, you're dressing up this thing. It is clearly a disguised deposit, and therefore you misrepresented. But that implies a mindset on the taxpayer that I don't think was proven in the court of quo, right? It is implied. It is implied, for example, from the advisor's failure to provide the full policy detail in the experience accounts, which, by the way, is something that happened after the return went in. The misrepresentation must, when you look at my criticism, must be in the return, not what happened after the return. If that were the case, and I make this point somewhere here, I think, and in my book I make it in a little bit more detail. If a taxpayer's actions after the submission of the return, and it's the same with USPs, if the taxpayer's actions after the submission of the return can be relevant to the question of whether the veil of prescription can be lifted, then a taxpayer can cure any misrepresentation that he made. So in other words, I put something in a tax return, right? that is clearly not deductible. I miss on intention. I claim something that's an insurance, self-insurance product, and I know it's not deductible, but I claim it anyways under self-insurance, right? Or other. Let's make it more obvious. I claim it under other and say salaries, right? That's clear misrepresentation. Now, a year later, I wake up and a change of heart and my conscience bothers me, and I send SARS an email and I say, listen, SARS, that thing that I claimed there, that was wrong, right? I made a mistake, and SARS does nothing. In the next preceding 2 years, and the assessment then becomes older than 3 years, then the taxpayer would have cured the misrepresentation in his tax return, because then we must look at the conduct of the taxpayer after the return was filed, right? And there is a tax court judgment that confirms that a taxpayer can cure the misconduct, but my criticism on that case is it can't be, for exactly the reasons I've just discussed. The question is, what did you do? Where's the misrepresentation in your tax return, right? It's the same with USPs. SARS says, and I must be careful now because I've got a case pending at the moment, but SARS says, I'll use the case, there was a judgment a while ago where SARS said they argued in their pleadings for an increase in the understatement penalty because the taxpayer had changed his defense 4 times after the assessment was raised, so in the objection process. And the court said, well, you can't do that. I appreciate that it's frustrating, but you can't build a USP case, misconduct, at the time the return was filed on what the taxpayer's conduct was after the return was filed. Right? It's the same principle here with the issue of prescription. I mean, it doesn't stack up, right? So I accept the court's point on materiality. So remember, SARS had said that they're lifting the veil of prescription. They want to tax the interest. They want to disallow the deduction. That's why they lifted the veil of prescription. And the tax court's answer to why the interest should be covered by prescription, as well as it said that the 1.1 million is not material, because the lifting the veil of prescription is in consequence of the non-disclosure of a material fact, right? Of a material nature. And the court said, well, 1.1 million in the scheme of things is not material. And I accept the High Court's criticism on that and said, no, I disagree. It's not the question of whether it is material in quantum, it's whether or not it materially changes the assessment, which it does. It changes the assessment, there's a tax liability. So with that much, I can agree, right? But it does not, and here's one of the most far-reaching consequences of this judgment, if it's not taken on appeal or overturned later by some other higher court, is the court says here that if SARS can find one issue, and this is fact-specific, so I'll bring it back to the fact, right? But the court says that if I can find that you didn't disclose the interest income, I can open up the assessment to change anything in that assessment. And this is what the tax court refused to do. It says it's not an open sesame if I find one issue that you can change anything. And the tax court, rightly so in my view, says that the basis for that is, well, I don't remember if they say it expressly, but there's sufficient case law to support that. AXA, First South African Holdings, HR Computech, I can go on, right? Each line item constitutes an assessment. So if you want to say, I didn't include the interest, therefore I misrepresented or didn't disclose the interest, then you can lift the veil of prescription to change that determination. But you can't say, oh, listen, you misrepresented the interest expense, therefore I'm going to disallow your depreciation claims. There's not, where's the causation? Which is the other issue. Where's the causation point then? First of all, it's not an issue only of causation, it's an issue of per line item, that's how assessments actually work. And second of all, where's the causation? Now I appreciate in this particular case, and I said it when I was discussing the tax court judgment, if SARS were to argue that if somebody declared, if you guys had declared the interest income on this account, I would have said, hang on, why are you earning interest on an expense? Then I can show, yes, that misrepresentation caused you not to allow, or caused you to incorrectly allow the deduction, but they didn't plead that, right? That's not the case they ran. And so materiality, okay, so the materiality point I concede, but the one item assessment changes entirely, and I think the facts of the case is specific here, because we want to say that the court only came to this conclusion in the High Court judgment is because of the non-disclosure of the interest also had a bearing of the deductibility. The court calls the interest the flip side of the same coin, which is true, which I can see on the facts, but that's only if you start looking into the disguised nature of the transaction, right? And again, that to me is borderline pushing on arguing SARS's case for them, at least it's my view. Right, so I've made the point that it's not an open sesame. I think that is a bit of a stretch. You can't say I can make a finding on misrepresentation on one thing and therefore lift the entire assessment. I'll tell you, let's give you an example of that. Is to swing this around, because I'm sure that there are some people who love this judgment, especially those who might work for someone who rhymes with Mars, right? So now the question is, if this position were to stand, right, we don't have to look at this on a per line item basis, then I can do the things that people used to do years ago, as they will say, I've got an assessment that I want to reduce assessment, right? There's some expenses I didn't claim, so I forgot to claim it, right? Now they come to us, but the assessment is prescribed. I say, well, unfortunately, there's nothing I can do. 992D3, there's no exception. There's nothing I can do. Then what people used to do, although the system now blocks it, then what people used to do is they'll go to the tax return and file a correction to add 1 rand's worth of income. The system will automatically raise a new assessment today, and then they'll say that assessment's not older than 3 years. I can object to claim my expense. Right? Because then we don't have to look at it on a line for line basis. Then we look at it at a one thing, therefore open up the whole assessment thing. It cannot stand. And I know that some might say I'm stretching the judgment beyond what it says, but I have argued against people before, and you will find that these sorts of arguments might actually arise as a defense to whatever case it is the taxpayer is trying to run. Right. But like I said, my issue is not so much with the result. I also thought this looks super dodge, right? Whether it's an expense or not, I also had my reservations. But on the case they ran, they should have lost. Right? Not the case they could have run, or not the case that could have been. And I've said this before in my articles, and there is some pushback from the courts. Erasmus is an example, though it turns more on the GAR. But there's BASF and there's baseline civils and a couple of judgments where the courts have said, Rule 31 is not a workshop for fixing defective assessments, right? That's not what they said. That's the wording I put to it, right? That's not what they said. But the reality is now we've got this judgment. It is very fact specific. It is on the facts, because I think the way the High Court approaches this is on the facts in front of the court. It is clearly a simulated transaction, but then it draws certain inferences, etc. But it goes beyond the pleaded case. But I think in reality, and as it stands at the moment, whilst we wait for this thing to perhaps go on appeal, I don't know. If it's going on appeal, I don't know if there's somebody in attendance that might know. If it's going on appeal, I don't know if there's a hand raised, but we'll get to that now. Or if appeal is being considered, it's fairly fresh. You can't assume that the product label determines the tax character. But this is something that I don't really say comes from the judgment. If somebody told me about this thing beforehand, I would have said, this looks not, I'm not as convinced it's tax deductible. And here's the kicker, right? The court explains that the person who sold this, I think it was Santam, went around in the area and sold this thing to people, the self-insurance product, right? And assured them, or somebody assured them, that it's tax deductible. As a taxpayer who's not a technically inclined person, I've heard this a million times when they come to me, and if they came to me on this, I said, don't claim it, I don't think it's deductible. And then the answer is always, but everybody else is claiming it. And this is this big organization that's selling it. Of course it must be fine, right? The furthest thing from the truth, in my experience, right? The fact that everybody's, in fact, I often, and I don't know what movie this is from, but in fact, the vast majority of people are almost always not right. I want to say wrong, right? But be careful of that, but everybody else is doing it, right? Because I've seen people pitch, especially these, like the last week's session, the asset for share thing, and then the dividend stripping, everyone's doing it. It should be fine, yeah, until they decide it's not fine, right? Until they raise an assessment. Right, disclose your annual contractual features clearly. Here's a bit of an issue that I have with the judge. So you want to disclose in your tax return as much as possible. So you can say, I safely disclosed everything, right? But there's only so much you can put on a tax return, which is one of the issues I have with disclosure as a basis for lifting the value of subscription. The interest is obvious. You should have disclosed the interest, right? But the contractual terms, where in a tax return for a company do you put the contractual terms? It's not there, right? To my knowledge, it's been a while since last I looked at an ITR 14 return, but there's also not a thing that says, is this a sham transaction, right? Which even if it were, and you believed it's not, and you ticked no, then so what? You know, so I suppose the issue is what do you upload? And we know we can upload financial statements nowadays, but I think that's why lots of people, when they file tax returns, it looks from the outside, for someone, it might look like they're overdoing it, because they're uploading annexures and schedules and that thing and that and that and that. But you always run this risk of SARS saying, but you didn't disclose this to me. I wasn't asked to disclose it, first of all, right, because it's on the tax return, and I uploaded what I thought is relevant. You didn't even ask for me to upload anything other than my financial statements, but I uploaded you the contract terms anyway. So you want to take, if we take the practical consequence from this, is upload as much as you can, especially on things that are contentious. Although if you admit it's contentious, you raise all sorts of other questions. Right. For SARS to identify the exact factual and legal grounds for the assessment, the reason I say that is because you want to be able to identify with a fair amount of certainty once they novate, which is not often as easy to do, right? So what, I'm not going to say what I normally do, that is a paid consultation, right? On prescription, SARS, this judgment suggests that separate qualifying conduct may affect causation and may lead to another assessment. I think that on the facts of this case, the court was saying that it was the flip side of the same coin. Not necessarily that if SARS can prove one line item, they can open up everything else. So if I bring the principle, the judgment back to the facts of the case, I think that's how it's limited. But then I still have issue with that because SARS did not plead the non-disclosure of the interest caused them not to assess it. They said it's just the non-disclosure of the interest caused me not to tax the interest. Right. Address each item separately and don't rely on a globular amount to object. And I've seen this before. Just yesterday I had a consultation with a guy whose advisors is running a case on gross income that is contentious, that's probably going to fail, right? Which has caused a massive tax liability. It's not probably going to fail. There might be some merit to it, but there's major risk in that case being run. And the alternative, when we asked the question, if we were to allow expenses, did you actually make a profit? No. Did anybody put the expenses in dispute? No. Right? So why are you running the case only on one item? Run the case on all the items, because if you succeed if you lose on the gross income case, then you have expenses, you actually have a loss, which also takes care of the bottom line of null, which is actually what you want. Granted, there might be further consequences later in terms of what you did later in your returns, because this is a historic dispute, as disputes always are. But these are important things that you consider when you take on a case, and even more so now, if we start to consider that this case might suggest you need to think about things that SARS have not thought about yet.